control. Your light is gone, and lonely darkness fill my soul. I wish that you could save me from my isolation. It's way too complicated. Let's start this conversation.
What's up, guys? How's everybody doing?
Let's start this conversation.
Thanks for hopping in. Decided to do a stream, late night spontaneous stream. So hopefully this is a good time for enough of you to hop in, ask questions, hang out, talk about ponies, talk about golf clubs, talk about the market, all that good stuff. So we'll get it started in a second. Just give me some feedback on the sound and we'll be good to go. Let me just transition through some scenes. Make sure that this is all lubricated and cool. So that's that. And then this is that. That's good. That's labeled incorrectly, of course. And then I think that covers it. So main. So this is just make sure that everything fits. So let me adjust this a little bit. Okay, because I got the watch list to the right. This is fitting. Cool. Cool. Now main trade. Cool. Good to go. Right. All right, good stuff. All right, so welcome. Welcome. Volume's good. Awesome. So I have so this is on Twitch and YouTube. Which is not good if like you're trying to monetize and be a YouTuber. But on the Blockroot YouTube, we don't make any money on our account. So, whatever. And not for nothing, if I go to monetize YouTube, I can't play. I mean, I get infraction after infraction. If like God forbid I'm playing like a stream playlist that says non-copyright, and then it gets to a song where in between the time the stream playlist was created and the time I stream, that artist has, congratulations to them, copyrighted their music. So you get your videos pulled. But anyway, I don't think it means that I could put on anything. Like otherwise I would have some like Rolling Stones, some classic hip hop, all that good stuff. Classical falls under, so you could put classical on a stream without any infringement because it's in the public domain. Vivaldi doesn't have a problem with you being on YouTube with his stuff. He is done with life's problems, right? All right, what's going on? Let me say hi to everybody. Brooklyn Copper. Ooh, Brooklyn Cooper. Brooklyn Copper sounds like it would be a name of a place, though, right? Brooklyn Copper. Like it wouldn't be a copper place. It would be like a hair salon. Brooklyn Copper. Or coloring salon, rather. I don't know where I just came up with that. All right, Mina. Mike Chartrand. What's up, man? Mar, Mus. Gerasim. Mina. Miss Boogie. Andy. Yeah, so this will be saved. Spaceman, what's up, buddy? So I have one of your indicators ready to go and open. So Spaceman makes some great indicators. I actually have two open right now. And then let me see my Twitch chat real quick. Because I haven't broken into two. So I'll get it started in a sec. Runner, send oil to zero. I don't think so. I don't think we're going to zero anytime soon. I think that it's possible that oil can, be upwards of $200, which sounds terrible, and it is terrible, but it definitely can be higher than where it was in 2008 when you think of how much more capital has been inflated in the system, or rather how much money has been inflated overall since then. All right. D-Spizzy, Peg Hunter, D-Lives. How's it going? It's going well. Got fitted for some new clubs. All right, good stuff. All right, sponsored by Yo Mama. Yeah. Oh, Queens. What's up, man? Queens. Does it still say sponsored by Yo Mama? Oh, it does. All right, good stuff. So, real quick, just what we're looking at. It's easy to do impromptu streams and streams in general when there's really nothing going on. So, actually, my name is Mina, and there's some awesome coin named Mina. Well, nice to meet you, Mina. That's a really nice name. So, it's easy to do streams when there's really nothing going on. So from time to time, you guys will see me hop on like around lunch hour, like New York time. I'm based out of New York session, but like lunch period. That sounds like a high school period, right? Lunch hour, New York session. And that's a good time for me to stream. And then like right now is a pretty low volatility period. This is the chart that we're looking at right here is realized vol. You can look back to any period, but this is of the last quarter. So going on, we're going into the end of the quarter now. But this is year to date, so from the beginning of January, which I think is pretty good data. In the last couple months, the Fed and what the Fed is going to be doing has been driving a lot of the price action across markets. Been very news-driven environment. And that seems like something we were finally getting to like wrap our heads around, right? Coming to terms with, sort of have a game plan based on what happens at this first, rate hike. Who knows what it's going to be, right? Wink, wink. But that was the only thing we really had to focus on. And now we have another dragon to slay, which is, and not to make light of a situation which is life and death for many, it's terrible. No one wins in war. What was it? Plato said only the dead have seen the end of war. Is that what the saying is? Whatever. Anyway. Now we have this, and it's another wrench thrown into our process, right? So the markets have just been, they haven't been fun, right? Everything is not copacetic right now. It is, it's thin, it's headline driven, it's news driven. Prices move a couple hundred points and, a couple hundred basis points and look like they're maybe moving with a little bit of conviction, like we're seeing something develop and then collapse upon themselves. And then, immediately you start thinking, if the move to the upside was deemed to be significant, and now it's collapsed on itself, and that was something that's been undone. We've seen that many times where you have a move put up double digits, and then it unravels, and then you start thinking, well, this move, this is a multi-sigma move. Normally, this is something that we would get behind, when it matches up with other, confluent factors, criteria, taking out some levels, possibly creating, a change in market structure. This unravels, and then you start thinking, okay, so all the arguments for strength right now were just undone very quickly. So clearly this has to mean we're looking at least some reasonable distance in the opposite direction. Price pushes lower, and then it looks like it's going to break down, and then a strong bear move is engulfed by a bullish move, and it's overall it's choppy on the low time frames, but overall really it's just been a market that's been trending down, and with no help from legacy. So right now is a good time to do a stream. Just again, I talk in ellipses and I get back to my point. Just kind of covering that the markets it's a handful right now, and right now is a good time to talk because it's a period where we wouldn't expect much to go on. Maybe like a couple hours into the day, you can see where it begins to pick up, right? You guys can see on your screen the area where it begins to pop a little bit more. That's where we have an increase in volatility. So this is realized vol, right? So it's historical, it's not forward looking, but it remains to be pretty consistent during the trading sessions. So I want to go over a few things. I want to take questions. Is anyone else's audio cutting out? So apparently Zcash is moving because of some Halo 2 upgrade. I don't really know what that entails. I am in a pretty smart DeFi chat. and they help answer those questions for me because that's not my area. Just give me some. Okay, audio's fine. Good. Someone said it cut out, so I just didn't want to be 20 minutes in the stream and have one of those, bozo moments. So real quick, I just see a couple questions. Blockroot's course fee, monthly, one time. It's $49. We don't really advertise it at all. You can finish in a week, honestly, and cut out after that if you want to. I don't, we don't need recurring members. It's a course. You take it, you finish it, copy everything you want, record it with your fucking phone. It doesn't matter. I honestly forget we even have the course. Maybe eventually we'll just make it public, free. All right. Anyway, so we have really quick. We have we have a pretty big week ahead of us. I feel like we just had we haven't had any kind of breathing room at all in the last couple months, but we are coming into a pretty significant catalyst or potential catalyst. What is usually one of the larger catalysts trading legacy markets. This CPI print, right? So I think the expected is 7.9. I mean, I don't know if you believe in a higher power or if you believe in a statue they keep in your home, or if you believe in anything, but pray that does not come in like scorched earth, even a few points above that. In line with it even is not a good look, right? I mean, the best possible situation would be for CPI to print lower, and I think it's just a fool's errand to even start thinking along those lines and set yourself up for, I don't know. It seems it would seem like you have a tenuous grasp on what's taking place if you think that CPI is going to come in lower, unless it's just all rigged, and we know that a lot of things are rigged. But that is on Thursday. That'll be what you'll likely see is that you might have a bullish response. Let's say it comes in line, but usually like what happens in the first couple minutes is faded pretty quickly. So if you see a price spike up, and this is where like ATR bands are good, any kind of standard deviation band, having an understanding of what norms are in general, right? So like let's say the average price movement for a 30-minute period throughout the day is $300. There's low volatility days, like I think it was Saturday where our ATR was like sub 200. But that was after a big move down where, again, the average true range for that day was, I think, along the lines of 400. So it's important to know those details because, like, let's say in a matter of like a 5-minute candle, you have a move that's like 500, 700, 1,000 points, and it's to the upside, and let's say CPI comes in like in line with expectations. I think that probably still gets faded off anyway, and that's just like short-term traders, like your smaller traders, getting behind a move that ultimately, again, just kind of undoes itself. A lot of times you'll see that these headline catalysts of well-known in advance events like CPI, non-farm payroll, we all kind of do the same thing. Like you don't want to get behind. Look, there's no move, like I've said many times before. ATR band is average true range, which you can calculate based on any time period, but it's the average expected range of price movement over whatever look back period. So you get to see sort of a norm for price behavior. So you could calculate what falls outside of those norms, what is a multi-sigma move. Usually multi-sigma moves indicate change. If we're in a mean reversion environment and there's nothing significant and you have a move that's multi-sigma move, right, or something that's outside of the norms, usually that's pretty fade worthy. Through a level is important, whether it's into a level. There's a lot of considerations, but ATR band, it's calculated based on the ATR, which is, again, the average true range. But the only thing that would be like anything that's a legacy catalyst like CPI, non-farm payroll, job support, the unemployment number, all these things, right? They are, for the most part, you could fade whatever direction occurs in the first half hour. The exception of like, and this is what I want to sort of communicate is, let's say that CPI comes in line, you arrive at your desk, you're there for the print, you get behind a move, and you have a move that's already well into profit, and you think, well, maybe this is going to have legs, maybe this is going to lead to a more sustained move. You're never really going to have that based on these events. The only event that I think, like, if you arrive to your desk just in time to catch the news, which would be, this is rare, but it's a catalyst, it paints a good example, would be like, let's say a central bank said that they were buying BTC. Something major, right? Or major negative news where you wouldn't want to like fade that move. You'd probably want to get behind it, right? So we have CPI this Thursday. I can't imagine that it's going to be good, honestly. So we have like hot inflation. Commodity prices are just off the charts. This is hurting everybody, right? I heard someone say today that it's a commodity bubble. It's not a bubble. This is geopolitics, right? This is not a bubble. So it doesn't. I wouldn't necessarily expect that it's going to unravel without any kind of major structural change, or what a change is taking place between, let's say Russia, Ukraine, the United States, and every party involved right now. The only thing that I could say that would be, markets right now are. I see some people saying that they want any reason to move up. They're moving in both directions without much problem. They're just coming back and forth, right? I don't think that I don't think we're going to see that there's any major changes unless we have a big shift in the inflation print, which I don't think is going to happen. So you could just kind of put that as like put that on the back burner as far as expectations go. Or there is a peaceful resolution or some kind of resolution with what's taking place in the conflict. So those things, I think that a lot of smarter participants are waiting for right now. The uncertainty right now is just, it's shared across every type or shared by every participant. There's no single entity right now that is looking at the market and saying, no, this is, there are people that are going on TV and saying it, that are pundits and they're talking their book, but I promise that there's a high probability that, your Bill Ackman, your multi-billionaire fund managers are in the same sort of shoes as everybody else with regards to expectation. Like, we don't know what's going to happen. There's too much uncertainty when it comes to the actions of certain leaders right now. Anyway, let's finish that off. So, I don't want to get like into. Yeah, I'm going to show that in a second. I just wanted to like go into this long diatribe on bullshit, I guess. Right now we're in a legacy-driven market. So before we go over the setups, just to show you what's going on. BTC is how you figured it out, how you will play it. Oh, okay, yeah. BTC is being driven by the S&P right now. You'll see there's deviations, obviously, when the S&P is outside of cash sessions, in which case it's going to be the ES you're going to look to. And then you have the period of, after Friday evening into Sunday evening where the ES is, not trading. And the BTC can more or less move on its own. It might be a good indication of how risk will behave anyway, because it's the only tradable liquid asset at that point. Don't worry, I don't think that we're there for the inside day setup yet. We're not, so it's all good. It's not the most attractive inside day setup, but we'll go over that in a second anyway. Let me make sure. Can you see that? Yeah, you saw it. So everything's being pushed around by the S&P right now. BTC is just behaving like a higher beta asset relative to the S&P. So just keep that in mind. I don't think, there's brief periods of outperformance, but I think looking over a longer span of data, it hasn't done much. It hasn't done much to really break the correlation, right? It has been just temporary. So I expect this to remain. The same setups, though, that take place in Legacy take place on BTC, right? The same setups that traders get themselves caught into, getting trapped, panic selling lows, buying breakouts. You're trading based on the same emotions, right? With relatively the same activity taking place in the underlying assets. All right, so let's take a look at BTC really quick. So first of all, as I said, I did a stream yesterday. we've just been in a range since the beginning of the year. So we have a market that, on the high time frame trending down, middle time frames right here. These are weekly TPOs. I'm going to get to a different setting so it makes it look a little less compressed. Weekly TPOs in the middle of these, in this larger range, right? The larger range, let's say between like 45, I think I said 45.5 yesterday or whatever, it's an area. In the middle of the structure, you have brief periods of trending behavior on the low time frames, right? Like intraday, 2 to 3 day trends, but they're just rolling over on themselves, right? So largely in part, if you look at the structure, we looked at like a quarterly TPO, a monthly TPO, or even zoomed out on the weekly. It's just a series of price establishing value lower, right? Brief periods of consolidation, value established in local ranges, accepting below, trending lower and continuously being accepted lower. No major kickback until we got towards the end of January. But now for the last, again, going back to, it's more like this breakdown right here. So the end of January, all of this is just basically value overlap. So periods of trend throughout the week, but a higher time frame range, which gives you, really nice high time frame levels to play off of if you're looking for like the larger swing trade. You have intra-week trades, right, that are like momentum trades throughout the week, but nothing major changes until something major changes, right? So in this case, I'll take these off right now. I just wanted to show you guys the overlap. This is Spaceman's TPO, by the way, and I just have it set to the weekly setup. So when we look at an inside day setup, so really quickly, I will go to a different chart. Or we'll use this first. So an inside day setup, if we just zoom in, you'll see that yesterday's high, yesterday's low are completely inside the prior day's candle. So this is like an indecision candle, right? You opened, mid, up, down, closed, right around the center. That was a a balanced day towards the end of the day. Pretty normal, normal variation type of TPO day. I'll go to that in a second. Yesterday was very balanced, right? Rotational, balanced, good kind of day to build this setup off of, because essentially this setup on its own without the confluence of TPO is kind of deemed like a break from balance anyway, even though it's not as strong on its own without seeing the underlying activity, right? Because you could have an inside day setup like this, where this candle was inside of the prior day, but I mean, not for nothing, this candle could have very well opened up here, taken out the high, moved lower, closed here, and then this candle could have, let's say, opened here, moved lower, moved higher, and then closed here, right? So the transition was down and back up. Over the last 2 days on their own, it wouldn't necessarily be the case with this structure that you'd say it's like very balanced. I mean, it's balanced within a range standpoint, right? It's balanced like it's like completely swallowed by the prior day, right? It's like a Pac-Man setup. But it's not like the structure within it was balanced intraday. Whereas like you can have, again, a setup like today where it actually is that today's structure was a lot more rotational, right? A lot more balanced. So this sets up for, I guess, an even more reliable setup, because on its own, normally you would have, like, you might have 2 days that aren't an inside day setup, but they're very tightly balanced. So value is clearly established in a really isolated and well-defined area. And the break of that balance, whether it's a value area high or value area low, would be something that you wouldn't fade at first acceptance. So in this situation, we actually have it, and I'll show you in a second how we have it in both ways. But you have the inside day setup, right? So inside day setup for BTC is not as attractive to the upside as it is to the downside. All right, so not for nothing, we haven't taken this high yet. So right around 39, 6 and upwards up to 40. We haven't taken the low yet, but if we're going off this setup and saying that, the setup is, here's the high, here's the low of the prior day. The setup is a break of that structure usually leads to a pretty reliable move to the prior day's high or prior day's low. And in this case, you have multiple highs up here. So multiple areas of this area acting as resistance. You haven't tapped the extreme at all. You haven't taken out any of these highs. So you just had a series of days that have transitioned lower. So the break of like 39,362, a lot of the times we're just saying that leads to the prior day. In this case, I think that there's a high probability that, considering the transition of slightly lower levels, right? So slightly lower highs, this probably gets ran, right? So a little stop run that probably leads up to 40. So what you're looking at is maybe a move from 39,362 up to 40K. Gun some stops. We have a single print right around that region. Clean up all those highs, and that's like a 700 point setup, right? A 650 point setup. And if you frame it in the perspective that the average movement throughout the day is $300, then a move that captures, a good portion of the day's ATR is a good intraday momentum scalp or, momentum swing trade, depending on the distance of this setup. And I say depending on the distance of the setup because you can see to the downside, there's a little bit more room to run. And I would still expect the same outcome, meaning the break of this low leads to a pretty swift move down to this low. And not for nothing, I think that this can be grabbed, right? You could see this grabbed and then offer response, but there might be a chance of this leading to more of a spill than there is a chance of this leading to a higher move up, right? So just weighing these in consideration with how things have been moving, it's not like we have a tremendous amount of support to the downside. Excuse me, I just opened up a Howell's New York Seltzer water. So just consider those things, right? So if we look at this on the TPO chart, so instead of going to, I'll go to EXO in a second, but I'll put on Spaceman's TPOs. So set it to daily, auto tick. Actually, I'm going to do this so that it's a tighter tick. What is my, oh, I have to do this. All right, here we go. So now you see what I was talking about with the balance, right? So over the last 4 days, we had a very clean range forming after that initial move down. You had a deviation below that looked like it was going to puke. I was short ETH. I talked about a throwback likely occurring and me adding. I never even added the second portion of my position. I closed out my short just because I'm also experiencing a ton of uncertainty, right? Not trying to give back any of the market, but I was really convinced that this was going to lead to a further breakdown and that this throwback would lead to that breakdown if we got this, right? So, this was either going to skirt away or we would get the pullback. We never ended up having any kind of follow through after that pullback to the downside. So this ends up looking much more attractive based on where we're trading in relation to where all the risk was put on. So, B, base, you could think of B for base, but if you're trading below where that accumulated risk was put on, it just makes it likely that it's going to puke, right? Because whoever got involved there, you can imagine if you're trading below it, whether passive buyers or passive sellers or aggressive sellers, when you're trading below all that, right, there's only one side that's doing much better, right? There's only one side that's doing well. So now it's kind of like you're accepted back within that previous composite. So here's the inside day setup though, right? So prior day, high, low, yesterday's high, low, today's currently printing right now, the beginning of the day is printing, and more importantly, super balanced distribution. So almost Gaussian, not, it's a little chubby, but very balanced distribution. The only thing about this distribution is this is almost perfect. I realize I probably don't have the, I didn't change my color settings. So let me see, make things a little, there we go. Maybe it's my excess. There is no pour higher, there we go, popped. we have a decent low and a decent high right now. So there's no real excess, but it's within a prior day structure. So excess, if we like tapped uncharted areas, or areas we hadn't been to recently, like tapped into a pocket, or took the lows, you look for excess. We have a poor low down here still. I think that we're revisiting this low regardless. Like that's still where I stand. I think that if you're asking me like what happens, I think that maybe we break up higher, run some stops, and then end up moving down again. Either way, but this is a very balanced inside day. Just to stay on track, very balanced inside day. So this normally on its own would lead to a break from balance setup. So you're looking for acceptance like through 39 to play towards that prior high, right? So acceptance through 39, play towards the prior high. I think, and I said 40, even though the setup is normally to the prior day's high. Remember, I said 40 because I think that these highs just get ran. I doubt that this just moves up, taps this high, and then rejects from there. I think that, when you have highs like this that are just ever so, they're just barely higher than the prior, right? It just makes it very easy for those levels to be small pockets of liquidity that get, flushed all at once. And then we more or less run into these single prints, tap the rest of that gap, fill that inefficiency, and maybe look to see whether or not we accept above that structure for potentially, a higher, a move further up, or, possibly trap some buyers up there, trap some breakout longs before rolling back down within this range. And if you rolled back down within this range, honestly, if you, like, let's say we tapped into these singles around 40, right, flushed up to, what is it, like 40,100. If we accept it back within this range, you're just looking to play back towards the lows of what ultimately is a composite. So this wouldn't be necessarily a first target. It'd be probably more along the lines of like 38.6. So Luna has so that is the setup for BTC. So right now we're in the middle of value in a very balanced day. I don't think that it's necessarily a good setup to just get involved right here because it's very accepted. Right, so price is very accepted. Like, who am I to assume that I, have a better idea of where things stand than buyers and sellers right now who are very much in agreement. What you're looking for is the periods where buyers and sellers are in disagreement, and one side is able to, overwhelm the other. All right, so Luna is one of the other setups. So Luna's setup is Oh no, so it's not Luna, I'm sorry, it's AVAX first. So AVAX setup is not a perfect inside day, right? So it's actually yesterday's high. We have not an inside day necessarily, right? Because I think technically yesterday's high was, let's just double check. I think technically yesterday's high was above, and we grabbed the prior day's high, yes. So technically we grabbed the prior day's high. But we have equal highs on the daily. So equal highs on the daily, I think that this is a pretty good area. You could expect some kind of stop run at least. And this stop run, I don't, if we accept above the last 2 days highs, fine, right? Then I would say, all right, so you accept above the prior 2 days highs. So that is, realistically, that's right around, let's say like you're accepting above, I'm stuck in the drawing tool mode. One sec. Let's say you accept above 77. Price is transitioning lower. First sign that maybe we're basing out, accepting above, last 2 day structure. Normally you'd look for a trap to set up here, stops to get ran. If you accept above here, then I think that you just have to take it from level to level. So, 77, potentially up to upwards of 80, 81, 82. You see this little support and resistance flip that took place. You have a little bit of a gap right there, right? And then from that level, ultimately, I think in this market it pays to just be very conservative and play level to level. So take the small bites you can get. That is like a pretty optimistic way of thinking right now, though, with AVAX. Like AVAX today, there was some positive news, and just to tell you what kind of environment we're in. Positive news in a bull market usually going to lead to a lot more follow through. Positive news right now, puts in a 3 basis point move. I longed. I closed out just short of 2 basis points, and then rolls over, right? So I think that, you know, you have this kind of like pennant forming. That's great. Like if we're outside of, you know, I think that you have to take a major level at that point and be well outside of this and hold before you can say anything about prices moving much higher. But I think that there's a high probability that if you have, you know, a target like this, that it might more than likely lead to a sort of a stop run that ends up breaking down either way. So I just would be careful about chasing any kind of what looks like any kind of breakout. But this is, you know, very similar to what an inside day setup would be, right? Because you have equal highs, and then the flip side of that is like the play off of the low, right? And if we look at, you know, the underlying structure for how the last couple days have distributed, so we'll just put this on real quick. Change the tick. I like to change the tick manually. Just think it makes it. I don't know. I don't even know what I was gonna say. I just sometimes the scaling, just visually, I think it makes it look a little bit better to do them individually for myself. Yesterday you have, and here's another thing. So yesterday's structure, right, the one we just closed out, has excess at the high. So honestly, you're looking for, just in general, for price moves up to this region to again act like resistance. You know, if you look at it the prior day, right? So here, price was able to spend much more time up here than it was back, you know, than it was just right here. So if anything, from just a left to right transition, you know, this was a very swift rejection, and price was able to establish a little bit more value up here in the prior day. So a trend change might be more obvious if you are suddenly, again, if we don't just, I mean, if we're talking about a potential stop run, it's going to be a stop run, right? It's going to be, this level's ran and very quickly prices are rejected. But a sign that things maybe are changing would be ultimately, you know, because we have the ability to look at this, would be, hey, this level was excess, right? So this is a selling tail, single prints, right? It's not necessarily called single prints if it's at a tail, but I think it just to, I guess, articulate the way that it looks also. You know, if you look at a 30-minute candle, just one rotation through that level, that makes it, that would be single prints if it was in the center of a TPL. But either way, this means that it was rejected in that region. If you start to see that suddenly prices are accepting up here, well, then you have a period where supply was able to overwhelm price, but it spent a good amount of time up here. You have a period right here where very swift rejection occurs. And now if you're back up here and you're able to hang out, right? Don't like ever take my drawing seriously. There's some traders that have really good drawings. Like honestly, like Trader SZ, he makes some nice little squigglies. But I'm just trying to convey the idea of presence, right? If I do this, if you're able to accept in this region that previously was not very accommodative of price, then maybe that's your sign that this is going to move further up, right? Because anyone who sold at this point, if they're not able to reject this with the same level of effort, that's a pretty bad sign, right? If you're a seller and you say, hey, you sold up here and now we're just hanging out here, it might indicate that there's some kind of change that has taken place and that, yeah, we have to start looking at higher prices. A stop run would be pretty quick. So, I don't know, maybe we'll start to see this setup play out during the stream. And for that, you know, this is why I have this set up. So I could very quickly, for example, I have my ladder that's just hooked right up to the, you know, AVAX, for example. So that is that setup. You have equal highs. You know, things are relatively balanced. And then with some other pairs, not for nothing, Luna. If we look at Luna on, I don't know if it was Luna that I wanted to look at, or was it AVAX also under the same idea as, what the hell was I looking at? Was I looking at Atom? No. Bear with me one sec. Maybe it was Luna. Has the setup already started to take place during the stream? No. Oh, okay, here we go with Luna. I thought I had something drawn. Let me just switch around. No, it's okay. All right, so Luna really quick. Lower time frame levels being flipped, which is a good sign, right? Luna is showing strength, though, against BTC. So this is one of the first things to notice, right? Luna is still showing strength in the face of, you know, just general BTC weakness and shitty market breadth across the board. Right now, I think the most clear level on the chart is, well, we're kind of blasting through it right now, is this 88 sort of $90 region. I think it's, at this point, it's a very high chance that, high probability that if we're holding above this pivot, right, so consolidation, first pivot to breakdown, and holding previous levels, right, with retest, that you probably run in these highs. So Luna is probably moving up. I don't know if I would want to just buy the breakout right here, but there's a pretty significant chance that Luna is back up at around, you know, 96, 95 plus in the near future, just based on the way that it's looking right now in the low time frames. And on the high time frames, you know, levels, microstructural levels are being flipped and, you know, doing their job. It's not like we're seeing any kind of weakness, again, against a BTC pair as well. Let me just go back to the other screen, because I noticed that when I do this, let me look through the chat real quick. One sec. There's another pair that I could have sworn that I had wanted to look at. And it reminded me of the setup of Atom. But it could have been this little flip. Because originally Atom back here. What was I thinking? What was the setup? I can't remember what the setup was. No, it was Atom on the daily, and it was just, nah, never mind. All right, so let me just look at questions real quick. Let's take a look at BTC, just high time frame over the last 2 days. Not high time frame, but there's not a whole lot going on, honestly. Longs committing, shorts committing, but no one, like, nothing egregious. So it's not like, I mean, we didn't see a lot of shorts come into the market. And any of the moves down today were in the last 48 hours. So it's not like there's any kind of chasing that's taking place to the downside where you're looking for a big trap to develop. I mean, earlier, I think it was earlier today, in the move down to 38,275 region, there was a good amount of shorts that came in on Binance. Some of them were squeezed. That was like right here. And you can look at stablecoin margined. So we'll take off the CVD for coin margined. Take off spot just to make this a little bit clearer. I'll leave this the way it is. Just change these. There we go. So what you can see right here, square this up a bit. This is where you saw a good amount of shorts come in on Binance. Change my ink. Where's my drawing tool located on the screen? Here we go. This is where we saw a good amount of shorts come in, but you had longs closing out, you had shorts coming in. There hasn't been anyone that's getting really off sides. It's kind of within norms for what we see in derivative positioning. But this was a pretty obvious divergence. And if you looked at like something like Binance long shorts or Binance on XO, and you looked at like the net longs, net shorts, or used a combination of open interest and CVD on there, you get sort of the same thing, right? So from a left to right transition, right, price moves up, sort of choppy behavior. Another attempt at this low leads to more selling this time around. So if you look at the CVD, and just to make this more precise, use a line tool. So you have a higher low right here, and in CVD, and this I am just holding it down to keep it straight, you see that actually you had a lower low in CVD. So this is stablecoin margin contracts. This is this is this is longs closing out. So you have some selling that is from old positions that are unwinding, and these were old positions that had come up into this move, right? So we saw some longs get behind this. Nothing tremendous, right? There hasn't really been anything that stands out since going back to this point on the 7th, right? So some longs closing out, that helps the CVD, but there was a fair amount of new shorts that were actually open. Nothing tremendous. I think it was like 1,000 BTC, but just enough of it to lead to a CVD divergence. And these are pretty reliable. When you have CVD divergences that are intraday, I don't look at CVD on the very low time frames. I like to look at CVD over the course of like a day or a couple days. And if price is more or less range bound in those days, it makes it even better because you just have clean structure to really go off of some like obvious highs and lows, pivot points. And if you have more selling coming into a low and CVD makes a lower low and price, very much does not, and it's not even an equal low, then it's a good trap setup usually to get behind. And this structure actually, I actually got long here. And I hate to say things like this because it's not the best way to think, but I was honestly gearing up to long here anyway, not based on this. This was honestly the cherry on top. So if we look back at BTC, and don't do this because this is not necessarily the smartest thing to do. There's some similarities between these, and I'm talking about trading off of fractals. But if it's recent and you have an algo-driven, market maker-driven environment, you're looking at a different footprint. When you're looking at price in general, you're looking at a footprint of participants, right? So who's involved, right? When there's a mania, when there's like a trend involved, it's one side just overwhelming. When it's market makers and bots, as you can imagine, like if their activity is repeated and there's nothing else that gets in the way that's exogenous or some kind of outside force, right? A market, it's looking to establish value, and a trend by definition is new information being absorbed into the market because the market is going to eventually try to reflect all possible information, find balance, find value, and it should find a point where buyers and sellers agree, right? Establishing fair value. A trend is when new information comes in, the market is, absorbing new information. One side is coming in with different information or more information. Just trying to make this like a very simple concept to understand. Either way, very bot-driven, market maker type of environment, player versus player. It's possible that, the same participants that are creating this structure are going to still be doing the same thing in the moves down, right? As we have similar structures occur, right? Where you have an effort towards the highs, a breakdown, the consolidation, and potentially next breakdown. You have an effort towards the highs, breakdown, consolidation, and then maybe we get, something similar to back here. And what I was honestly looking at was this move right here. So, and you might see it like vaguely, right? If you look at how this structure has occurred, you sort of see that you have this period where this one is a bit more of a stop run. And so stops ran. But either way, a really nice plunge and then a grind back upwards, right, into that structure. So, move down, lower lows, highs are still being attacked, plunge lower, and the move up back in this inefficiency, right? So in this very one-sided move, and that's after you have that B, is grinding above where most of this distribution occurred. So if you looked at a profile, that's what really helps it. Here's your B, and then you're grinding above there. And honestly, I'm looking at that thinking, yeah, I mean, this makes sense. The market looks like, a few times it's looked like it was going to roll back down towards that low. You haven't broken any low, so why not get long? And in this case, you actually had a fair amount of shorts that had come into the market. It's always nice to be able to honestly not trade on behalf of just a fractal. But still, I mean, to be fair and to be completely honest, it looked similar to me, and I didn't think we were just going to roll. I guess the thing that I'm leaning on right now is that I don't think the market is making anyone. I don't think the market is giving easy trades, right? The market is bearish, but it doesn't mean that the market's just going to move in one direction and everyone's just cool if they put on a short, right? If you zoom out, the chart might look like this, but if you're zoomed in, it's doing this all the way down. Right? So, and this is just kind of a caricature of what I'm trying to communicate, but hyperbole or whatever. So let me just, because I moved some stuff around to do this stream. What are we at right now with BTC? With that inside day setup. So Spaceman's tool is actually useful for this because, I mean, not just for this, but there's your inside day. There's the high and low level, right? So prior day's high, prior day's low. Let me just change the screen so that in the event. So I have my DOMs just set up. This is for coin margined. This is for USDT margined. If you're looking at the DOM, you'll see that it'll change. And this is for whatever alt that I have connected on a watch list. So if I just click on my watch list, it's paired with that DOM. So I could change any of the pairs that I'm trading very quickly. So for example, AVAX is one of the setups, right? So I want to make sure that I have AVAX populated in this DOM, right? Make sure that I have the right AVAX. There we go. Okay. So there's BTC. If you guys have any questions, of course, throw them out there. So we're holding above yesterday's value right now, which is a good sign. And honestly, I mean, this setup is probably pretty juicy because I think that it runs some stops. Not juicy. I mean, it's probably like a 700-point move. But I think that it's likely. Put it that way. I mean, just look at these highs right here. No highs taken at all yet. Honestly, we're accepting outside of yesterday's value right now. I'm going to get behind this. Just for the sake of the stream, we'll place a... We'll just long 100 right now. See if I can get filled, actually. Well, I have to use the other. One sec. I have another DOM to the right. So I'm going to see if I can start getting filled. So you'll see that an order just popped up right here. I'm just trying to get filled for... I'm not going to do anything crazy during the stream. I think it would be good to just show you guys application. We're holding yesterday's value area high. We have 4 days of really highs that are just completely uninterrupted. And I think 40K looks like a reasonable target. Not getting filled. I'm not going to chase it. Because I can't get filled cleanly around... If I can't get filled cleanly around 38.95, I don't know. I don't want to be buying too high. It's not too high above yesterday's value, but we're into yesterday's... We're coming into yesterday's high right now. It's just there's a chance that the first touch of that might offer a kickback. I'd rather see that we could hold above yesterday's high. And that's, you know, if I put a position on, not yet, excuse me, I'm fucking my words up. If I get a position on around yesterday's value area high, I'm a little bit more confident because I could fold the position in the case we drop back within value with a little bit more weight behind the reasoning. Because I want to be careful about just a pop into yesterday's high that ends up getting faded right away. So I don't want to buy high. So we'll cancel that unless it comes back. If you guys have any questions, just absolutely feel free to ask. So there's not a lot of shorting coming into the market, not a lot of longing right now. Like nothing that is overcommitted so far. I mean, Bybit is getting kind of long, which is never good. So that's why it's a good idea to not necessarily buy it that high. Like to not chase that move when I didn't get it filled initially. And that was not like it's not like I was putting a significant position on, but it would have been just a starter. And if we held value, I could have, you know, attacked a little bit more. Normally when I put on a position, I'll mark it in the first portion of it, but the price was moving away. I didn't want to slip on the way up. So right now I'm looking at actually another screen. I mean, this is right in front of me, but I'm looking at combination of Binance, Bybit, and I have just lower time frame footprints open up for Bybit. So we'll see. I mean, if we ran this high, we get a lot of buying into that, and price, you know, begins to even tick back within structure. Just chances are that maybe we're going to balance out still a little bit more. You have some buying coming in, some selling coming in at the high right now, which usually doesn't get left behind. But we'll see. Meaning like aggressive selling coming in up here, usually you'll see that they'll get pushed a little bit more. So if you were to look at, for example, I'll show you guys. Let me just move Streamlabs. Hold on, top. So it's being sold already, right? So you see we had buyers buying towards the high, but you had sellers coming in aggressively. Not for nothing, usually if it's like a stop run and it's done, you'll see it'll flush out with most of the selling being done in the limit order, right? So aggressive buyers coming up, and you know that one, it's not like that's meaningful, honestly. If it was much larger, if you had a significant amount of selling come in, like 4 or 5 million contracts, 5 million plus in this little rotation, usually you're going to see that the market is going to push past that rather than like let that seller get rewarded. We're kind of just hovering at yesterday's high, so I still think that we push. And that's why it's a little late right now to... We'll see if we can get the move above and selling comes in and then it's able to hold. I don't want to buy the setup before the setup happens, you know. Would you say a bit of a CVD divergence on Binance? Yeah. Yeah, there is. Right between the 39.3 high. Well, right between yesterday's high. I mean, nothing crazy. But, yeah, it is. It does stand out. I mean, there is a good amount of volume that just came in on the initial move up to 39.2. Some buying coming in at the highs on Binance. So yeah, it does look like people sort of have the same idea. Buying the break of yesterday's high. Potentially move ups, you know, outside of this range. So we'll see. Cut the music distracting from your talking. It shouldn't even be loud, honestly. And not for nothing. I mean, unless other people complain about, so actually FTX, you have so I had to reload my chart. FTX, you have some chasers, but you have sellers on FTX also, again, just fading. It looks like you might have a nice little squeeze coming up. I mean, it looks like sellers on FTX are just coming in now because of the amount of buying that has led up from 38,950. Is it not anything like ridiculous, but yeah, not for nothing. I mean, if other people said the music was too loud, TT. Otherwise, I'm not gonna like I don't know you, buddy. I'm not gonna let you tell me what to do. What else, guys? Any questions? I mean, not for nothing. It's not like one side stands out right here. It actually looks like this is the... I mean, there's just a pickup in activity on from both sides right now, finally. And it makes sense because we're approaching like what might be perceived as like a important or pivotal region. Just because this area... And this is like when I say, you know, important contextual level or areas that stand out as possible high participation zones, places where you would look for traps or these setups to occur. This is really obvious right now. So when the market is approaching this level, you can imagine that if it's approached for like the umpteenth time, that you're going to have people like, just like I was for a second, but I was willing to get involved a little lower when it was a little bit more defined for yesterday's value area high. People that are just like, I'm buying in early, right? This is going to move up. Sellers, again, thinking, well, this is clearly going to fade. So it's just this level is starting to bring in a little bit more open interest. Nothing major, but if you look at just overall, we've had a move down, right? So we've had a move down in open interest throughout this structure. And this is the first sort of spike up that we've had. And this is, yeah, you can see a little bit of a CVD divergence, right? I mean, ever so slightly. Price is at that level. But what this is, honestly, so you got to be careful with something like this because this is potentially just leading, right? So you have equal CVDs, price is lower. You have participation coming in right here, but this could just be leading. I mean, a trappy setup would be more obvious if you have like a CVD divergence and, you know, price is now is beginning to lose a level, right? So like, let's say the divergence comes in right here, price consolidates, maybe takes a high and then begins to give you some kind of backside retest. Backside retest meaning, like, let's say we consolidate, poke a high, Pocahontas, and then have some kind of retest of this consolidation. And then meanwhile, you had a very obvious CVD divergence, and in that you had the confluence to say, well, that brought in new activity that's, you know, potentially trapped if we tick lower because open interest has, you know, seen a not substantial rise, but it's a rise nevertheless, right? This is, you know, this is like what? Was that like $75 million in BTC? If it's maybe it's a little more. Bad math, back of the envelope math. I'm thinking specifically from, like, for example, this is, you know, 158, 600. So if we were just thinking 2,000, right? So 2,000, and then it's just 39 even. We'll leave it 39.6. I said, what did I say? 75 something. That wasn't even the right math, but the point is, it's around that figure. All right, so let me just go through the chat real quick. See where we're at with AVAX. Solana, huh? I mean, these are so... It's compelling when you have a nice little lower... If you're zoomed in, you're looking at this in a low time frame, like, oh man, we're making a nice move off of the lows. But then you zoom out and you realize just how tight and crappy things have been. And you don't want to be too myopic right now. At least if anything, this is, if you look at Solana, you have an inside day setup also. Right, so Solana, you know, you're 85 level, your 81 level. I mean, not for nothing, the 81 break is probably something that has more legs than the 85 break, right? But if we were looking at this on like an hourly and just to get an idea of where, you know, context and market structure, you know, your 85 break what? Opens up to a stop run right here. I mean, the most local level is right there. So at best, what do you get? A little bit more than that? Whereas, and my point is that if we continue to push lower with this, this is already like, you know, whistling by the graveyard. Not like I lean on diagonals, but the point is, like, it's pretty defined that it's having trouble moving up, and this level is probably accumulating a good amount of stops, right? Took this low, but now you're just hanging out back down here. I mean, the idea is, like, if you've got more longs coming in on Binance now, chasing this up, same on FTX, but you finally have people fading on FTX a little bit more than Binance. Just looking at this move right now, it's probably going to be pretty wicky. If you look at how price, like for example, if we just zoom in, like look what's happened, right? Just appreciate what took place down here versus what's taking place down here, right? You have high volatility rejection from this low, right? And when I say from this low, let me just pan this into the view space for a second. Circle's kind of right in the same spot. Point is, this low right here, what's going on with my mouse? Was taken right here. So you have a significant response. Okay, this is going back into January's low. This area rejected price, and now you're what? Your low volatility right there again, when previously that was like, no, we're not accepting prices here. Just to be, not to be silly, but the point is, you know, the activity here is much more abrupt, much looser, much more responsive, and this is kind of limp. So it's kind of like the idea of accepting into single prints or accepting into an excess or a wick. You just shouldn't, you know, you don't want to see that because it's indicating that there's not the same level of responsiveness from the region. And not for nothing, for stops for this play, for like pretty well-defined mechanical moves, the stops are, a lot of times I'm not using a stop, right? I'll have some type of volatility-based stop if I'm swing trading, or some type of market structure combined with volatility-based stop, so ATR, market structure on, you know, ATR used off of market structure just to make sure that I'm not getting wicked out. But a play like this, like for example, a play, you know, above, so let me change the screen real quick. So here is a, again, very nicely defined range the last couple days. You know, you had your attempt lower, maintain the belly of that B, right? Now very balanced. Basically, you know, if we combine both of these profiles, and you move this value forward, right now we're kind of hanging out at the top of what is probably, you know, the last 4-day composite, right? I don't want to usually, like this is outside of it, but if you combined all of them, I mean, look, it's very balanced. So we are right on the cusp of yesterday's value area high, right? And ultimately the composite value area high, and you have a little ledge right here. So it's nicely defined. So if we were looking at a play breaking outside of value, right, trading up to those single prints like I mentioned, my stop is not for nothing at a maximum gonna be below this point of control. I mean, not for nothing, a lot of times if the trade, if we see sellers come in and price is able to hold and move up, my stop is going to be below where those sellers came in. But I want to put it on, like if the move is beginning to gain steam and we're seeing volume come in, my stop is going to be below where, you know, probably one ATR, or excuse me, not one ATR, but one 30-minute ATR outside of that low. Just because if participation comes in behind the move and we lose that participation level, meaning that pocket of volume, it's probably going to end up what? Just there's chances are that it's a failed auction outside of this region, and maybe we're just going to rotate back within this range. I say at a most this point of control, just because it's a nice meaty area now where most of the volume was done. Good area of structure. You know, the last few days, if you were to lose that after, this is looking like a decent setup, right? But if you were to lose the point of control, it's you know, that much less compelling. Let me reset this because I want to point out yesterday's. There we go. So that value area high of the entire structure was a little bit higher. This right now, if we're considering this a break from balance, the invalidation is that it shouldn't be back within balance. So I guess that the most important thing is inside day setup, but break from balance. The inside day setup is the break of the high. If you're trying to front run this even and say that this is a potential break from balance, and if you're looking for the low time frame trade, which again we missed from the value area, this setup would be from this value area high probably to yesterday's high. So you know you have a ultimately what is a 500 600 point move. The invalidation is accepting back within value, so back under 38.8, just to be precise. Did I miss, wait 1 sec, I'm just going through the chat real quick. Yeah, what I'll do is let me just change the screen, and then I'll pull the chat down so you guys can see where I'm at. All right, Night Spaceman, sorry I missed that, bud. Yeah, so Hasaka's tweets are a really good example of an underlying change in the market. When it's a bull market, the market wants to go up on any good news, right? And bad news has no effect. Bear market doesn't do anything on good news. Might be briefly doing something, but a lot of times that might be algo driven. But you'll see it unwind very quickly, and the market instead is very responsive to bad news. So like, for example, we've seen a couple times in the last couple weeks, old bad news come out that's already known, right? So technically it should be, let's just, how do you want to say this? It should be disseminated already by the market, right? So we should already understand this, have broken it down. There's no reason for it to have any kind of future effect. It's old. But the same like old news that's kind of paraphrased in different forms has had the same negative effect on the market, right? So it's it's a sign of where we're at. Panicky, headline driven, shaky market, thin. No, I cut Atom. I didn't even bother to get filled for my remaining in my Atom position. It was a ballsy play. But I ended up cutting it after, I think it was like it moved like $1 in my favor. I shared it on Twitter actually. So a lot of the times people don't believe that you can cut out of a trade right after you entered in it and make a little bit of profit. Like it either has to be a ton of profit or you're stopped out. Break-even trades don't exist in reality. I mean, technically if you close at break-even, it's not break-even, right? Because you're paying for slippage, you're paying for transaction costs. But no, I closed out Atom like $1 in profit, honestly. It just and once it started unfolding, like I immediately divorced the trade. It's not like I think like, oh, what if it sets up again? I'll gladly get back in it, but it just completely falls off the map to me until it sets up again. So being that the market was not very supported across the board, meaning like this market breadth right now is shit. So there's market depth and market breadth. Nothing right. There's very few things moving up right now. Most things moving down. So it's bad market breadth. Like market breadth is something that's usually used to analyze the S&P 500. How many names are moving up on a given day? How many names are moving down? So like the advanced decline. But Atom was moving up on mostly on its own. So the idea of letting that remaining position fill, it was just a last minute decision to cut it because I did have limits below. So looks like just more commitment coming into this area right now. So I just think at this point I think it's a good chance we wick. Well, let me just go through these. I might miss it, might not, but so KNC I think was an awesome long. I ended up not taking that. Just have to keep. I have to go back. I've had a couple alerts on charts, but nothing has been really that compelling for me to go through all of the charts every day. I ended up eliminating a lot of stuff, whereas normally like during peak run or when things are zipping and having a decent amount of energy to them, or when they have just like any kind of underlying momentum, I will make sure that I populate my charts with alerts so that I don't have to like have eyes on everything. Like I'll be alerted, but I missed that. KNC had a really nice setup. I'll go over that in a second. It's super obvious. Do you see very low lows? No, I mean, I don't think about them. There's a possibility in this market, obviously, depending on what the S&P does, because it is driven by the S&P. If the S&P were to drop 10%, Bitcoin drops like 20, right? So I think we're due for a day that's like a 5% day in the S&P, at least. I think we're getting to a point where something's going to break. I mean, it's just my kind of heebie-jeebie feeling, which has been effective in the past, not at perfectly timing things, but having an idea that, yeah, something's off. I mean, if you look at, like a 5% move doesn't sound big, but in the S&P, that's huge, right? I mean, the S&P right now, the VIX is, what is the VIX at? Hold on. The VIX is at 35. So if you consider something like the rule of 16 for the VIX, which is you could annualize it by multiplying the VIX by, you could get the daily expected move, excuse me. You could annualize it too off the same figure, but I want to talk about the daily expected move. The daily expected move for a VIX that is like 35 is just over 2%. So you take the VIX, you divide it by 16, and that is the expected range of price movement based on S&P index options. So 2% is within expectations. So 5%, 5% plus, 10% is disastrous. And I think that you just have to be very mindful that there's a possibility. It's always a possibility. It sounds dumb. But I think the probability is pretty high right now. So if that happened in the S&P, and just to give you an idea of structurally where that is. So we're favoring this low. And I said, hey, I think, I said the last couple streams, I think we're going to hold this region. We're doing something right now in the last 2 days that is not good, right? We're accepting into this level. Never a good sign, right? But if we were to drop 10% or 5% from here, here's 5%. That's back in the threes. So we haven't traded back in the threes since last year. 10%, that brings us down to, these are ugly numbers, right? These are, down under to 39. We're almost at 20%. A 10% drop from here puts us at a 20% drop off of the highs, which is that's bear market territory for the S&P. There's multiple definitions of a bear market or considerations for what a bear market entails, but by then we would have satisfied all of them. 20% in the past in a short amount of time was good enough for QE, for the Fed put. Don't know if that means if we get that this time around. I think things have to be a bit uglier, but who knows? But the point is, if BTC does that, if the S&P does that, Bitcoin at least drops 20%. I think 20%. So it brings us down to the low 30s. And my point of saying like maybe can 20 happen? Hold on one sec. I lost you guys. Let me move this. Can 20 happen? Absolutely. It doesn't make sense for me to think about that even. It doesn't make sense to think about it yet though. As long as 30K holds, because we haven't even been back here since this consolidation. Just chances are, not for nothing, this can continue for a long, painful amount of time because we still have, on the high time frame, a lot of dispersion in this structure. So this can die over a long period of time, right? So that's just something to consider. This is a good low, I think, still. I think, 29, 30K region. I think we revisited it holds the first time around. So unless we start to see it looks really shitty down here, I don't have reason to think beyond that. And I think that, not for nothing, like just to give you the full view, there's a couple things that are pretty reliable in a sample size of nothing, but they are likely to be reliable because of the amount of people that would get behind them. So the 20 period on the weekly, that right now is an average, so it could catch up to us. So right now it's right around the previous all-time high. I would expect that in bullish conditions, we wouldn't get to visit the all-time high if we broke down, right? Like this whole region would be a place of just huge liquidity grab, panic zone for retail, great opportunity for whales to just gobble all this up. Yeah, I just said gobble. So you wouldn't want to see, listen, I mean, not for nothing. Sound like I'm just fumbling my words. Listen, you wouldn't want to see, fuck, I don't know. No, you wouldn't want to see that level revisited. It hasn't been visited in the past. That doesn't necessarily need to mean anything, though. The point is, it's not really substantial up there. You would want to see all that front running before then. If we were to move down further, your moving average should catch up a little bit anyway. Not for nothing, you have a little bit of structure before then in this region. So we have like a daily level around, what is that? Around, let me fix that. Right around 24, 25. Definitely don't want to see that happen. But if we were to fall below that, this is not exactly a substantial structure. Just an all-time high. The real structure, ready, this is going to be ugly. And this is just, we're just pointing these things out, right? It's just calling a spade a spade. It's there. The real pickup in structure doesn't begin until down here. So if it doesn't happen before here, chances are that it is going much lower. Which sounds kind of tautological, but it's like if it goes low, it's gone lower, and it's bad because it's gone low. But the point is, like, you want to see this front run. You don't want to see, I mean, not for nothing. It doesn't pay to think too far outside of the main level that we have, but this level should induce enough panic that it's a great opportunity for anyone who has a longer term view on BTC to get involved. And that's what a lot of this is about, right? Don't forget the high time frame. Bitcoin is showing that it is far more important now, but you have to remember to zoom out. And that sounds, I hate that, but an investment time horizon is not 6 months to a year. It is 3 years plus, and not for nothing, I think that with a high degree of certainty, almost certain that Bitcoin is going to be higher in 3 years, just without a doubt. So what that means is, like, can I beat 100K BTC in the next 3 years instead of just buying and holding? Yeah, I think I can, so I'm going to continue to trade, but I absolutely have to make sure that I have a cold wallet, which I have cold wallet BTC, right? I don't even think about my cold wallet BTC. It's not even something if I'm talking about selling spot, I'm talking about selling spot that I have on exchange when I'm not trading futures, when I just want to have underlying exposure with anything that I normally would be like in and out of stables with. But to not have cold wallet exposure that I can't sell, I feel like I would kick myself. But I've always had that either way. There's only been one other time where I've pulled out from cold wallet, and that was when I mentioned it was when I was already like well into long-term capital gain status. I felt like the highs right before May crash, I didn't want to give up beyond 50K. So once things started unfolding, I was like, pay myself a little bit. But I think that there are people with my point was, I think there are people with a longer term view on this market that realize, they realize that there's a value proposition for this, and they are low time preference and not sensitive to price, meaning 29K and 35K and 40K are not that big of a deal if you have a 10-year plus time horizon. If you have a 10-year plus time horizon, 30K and 35K, those are like rounding errors. So let me just go through questions real quick. Where are we at with BTC and everything else? Normally I would have like a little notepad, or a lot of the times it's honestly just a post-it, because I like post-its with my levels written out and stuck on my computer screen. So BTC right at that high. You have just commitment coming in right now across all exchanges. So thing about that is obviously the aggressive buyers up here that are getting involved, right? So open interest going up, no break in price yet. So that's not necessarily good. But if you do just trade, all these aggressive buyers that are packing in, so just remember this, all this OI that's coming in, it's taking place within this tight region. So even the aggressive buyers that are slamming or lifting the offer are buying into a passive seller. So when you have a region where there's a lot of tight activity, or a lot of activity coming in a very tight region, it just pays to assume this on its own is a trap above and below, right? Or is a squeeze for either side. So if we're able to now trade above the high, it's going to have legs. And it doesn't matter if all these are from aggressive buyers, because your liquidity providers, whether you're market makers or just passive sellers that are selling this level in advance, they're going to get rolled at that point, right? Just go through the chat. My mouse definitely has to be charged because it's like cutting in and out. No, I mean, I can't say it's a reversal yet. It's way premature. Like, equities are doing the pushing. I mean, not for nothing. Like, some basic standards I have, and I've mentioned these before as like levels that I won't be out in, or rather, if we achieve these levels, I won't be out still. I mean, at this point now, we've cut around the 20 enough to realize this is clearly in a range. But if we're above 44.5, if we trade above this level, it's going much higher. And this is so well defined down here, I'm not going to try to guess if this is the bottom or not. It's going to be obvious in hindsight, I know. But I think it's just right now the market it's being driven by the S&P. So it's way too dangerous to just say this is the bottom, because there's a lot of evidence that the market is not strong right now, right? That it's weak. Where did my chats go? I mean, not for nothing. Like, if we look at funding, let's just see, for example, there's a couple things. So like skew is negative, yeah. So if we look at 25 delta skew, it's been in negative territory for a while. It hasn't been like, because equities are in the driver's seat and macro is in the driver's seat. What am I doing? These sentiment tools that we normally look to, like funding, skew, they're not good enough on their own. So skew, futures were flattened, but hold on a sec. I know that I'm going to do that thing where I'm going to start at the next point, not have the thing I set up. So that's good. You have fading up here, but nothing. I don't think it's anything really remarkable. Overall, this entire structure has been on and off, positive, negative funding. It's not like. So let me zoom out a little bit more. Sorry, I'll get rid of something on this chart so it makes it a little bit easier. So get rid of this. So this was much more pronounced back here. Why is this? Maybe if I put daily on, or else maybe 12 hour. Here we go. this was much more pronounced. So open interest and funding. This honestly just looks like less people here, right? There's less open interest, less activity in funding. Even like not for nothing, I look at something like this. So we'll go to like Coinbase, for example. And I don't really care about heat maps. I say this all the time. Like, if you notice that there's confluence, that's great. If you see that prices, you know, this level has specifically been either walking up or walking down, you know, you can make a case for strength or weakness. But honestly, you're not going to see that level of activity on a heat map like this. I see something like this, and this might be stupid, but if we look at this structure, and you look back here, what's going on? Hold on. Pretty fortified, right? Decently fortified, right? Not a whole lot in here. So that, you know, you could say this is just Coinbase, but, you know, it's one of the leading exchanges. It's definitely not the leading exchange. So not a whole lot of limits stacked, offers and asks, right? Offers or asks, whatever you want to, word you want to use. So you could say that, wow, that's a gap. Like, price is going right there. But people that are getting involved down here are usually going to be taking profit on the way up. So back here, your buyers that were filled. So it's relatively the same across all exchanges. Your buyers that were filled, it's almost like you could see a transition. Filled, right? And then you have tranches that are stacked on the way up. Right? And the sort of logical areas where you'd expect price to find resistance and take profits to occur. And this is after the first high was put in. So you can imagine, right, this is after a really long run up, long consolidation, final breakdown. Anyone who's buying this thinking that this is the bottom is thinking they're going to get that mean reversion play back up. So they're thinking, you know, 50% at least, maybe double top, whatever. The point is there's a high degree of certainty that the market's not just going to go straight down, it's going to bounce. And there's enough building up down here to indicate that when you got towards the right side of this, that it was offside positioning in futures, just a matter of where the bottom is going to be put in, right? Remember, I got into like a tiff with a couple people because they said that I was saying much lower when I was just thinking it was going to go to like 28. And once it reversed either way, it got behind the move. But buyers here took profit on the way up. You can imagine that some of this might have been from anyone who got involved down here to unload the position, take profit, right? Be smart. This is kind of irrelevant. This doesn't mean anything. So you have buyers down here, right? Are they just suddenly thinking that, are they just throwing risk management and, you know, the normal smart considerations out the window when you take big positions? I would think you would have some presence in the offer. So it's almost like, I don't know, is there a lot of buyers down here that are real? So I don't know. It's just something that I thought about recently, and I was just wondering why this gap would be so pronounced when previously there were some decent tranches on the way up. So might be nothing, right? So now we're pushing above yesterday's high. I'm missing that right now. So you got some buyers coming in. Fuck, where's my... Wait, why is this not scaling properly? Hold on. Where is my... I had to move things around for the stream. So honestly, I think that this is going to, if this pushes up at max, that we would run the single prints at 40. And I think there's a higher probability that we end up revisiting lower. So this is either, to me, this would be a more attractive short setup if the highs are ran than that inside day setup, right, just up to 40. Now that we're above, you know, now that I wasn't able to get filled at yesterday's value area high, I don't think I would want to just chase this up. Some shorts right now being stopped out on Binance. Some beginning to get stopped out on FTX. So maybe we squeeze up a little bit more. I'm getting kind of lost on my screens because I shifted stuff around. I did it for you guys. All right, let me pull the chat up again. Oh, yeah, I say not for nothing a lot. I cling to like certain phrases and then I just get super redundant with them. But guys, like you'd be surprised. Doing streams is fucking weird. Like talking to yourself all like talking to a screen. Are you guys still on the screen? Because I'm rolling through your, okay, you are, so. Audio is definitely not mute. Yeah, so we have some longs that came in, but shorts are just starting to get stopped out, so I think this probably runs up further. Not for nothing counter. Really? Oh my god. 6 not for nothing, 7 not for nothings? No way. Jesus. I used to say other things too. There was and I noticed it when I did recorded videos. I don't talk like this in real life. It's a weird thing about trying to think about what I'm going to say, go through different screens, read the chat. They're like ways of my brain pausing and taking a breather. That's what those like gaps are, the ums. P&L statement. I don't show anybody my P&L in dollar terms, but I share my equity curve quite frequently. I share it on Twitter too. And that's through CoinMarketMan. Occasionally, very rarely will I share a position that shows exactly the position size, and only time I've ever showed my P&L statement or P&Ls as a dollar figure are for large losses, just to be real and just to fuck around. I think the last one I shared was like a $40,000 loss or $42,000 loss, or one of them was like a $22,000 loss. But no, I don't share a P&L statement. I don't have this is not a paid group. All we do is have a course. Nice try, IRS. No, I don't drink. I used to drink. I think I've had 5 drinks in the last 5 years. And they were probably all within 4 days, or they definitely were within like 4 days. No, I don't drink anymore. I went through like a phase where I never drank a lot throughout. Like I never drank every day ever, but when I did drink, I would catch up for all the days I didn't drink. And it's just very easy to get in poor habits when you don't have to show up to work and you have no one that you work for yourself. You're your own boss. And then after I hit 30, so I don't want to age myself, but I'm well beyond that now. After I hit 30, drinking was not the same. And not drinking, but hangovers or just any kind of amount of alcohol, just the next 2 days, I'd be absolutely not destroyed, but I don't know. I'm hyper vigilant about how I feel, how sharp I feel. Like you'll hear me call myself on things during the stream. That's how I am all the time with my own thinking, just in normal life. So Coffee and club soda and water. All right, so let me go through the other chat. No, I don't trade regular stock market anymore. I have just a passive portfolio. I might make changes less than the amount of times you can count on one hand throughout the year. I'm basically a barbell crypto and cash trader. So two diametric opposites in terms of risk profiles. And mainly I think it's just my way of saying I'm a USD maximalist when it's these kind of conditions. But aside from that, my primary focus is the crypto markets. Let's see. So the problem was I set the stream up to be able to take trades during the stream, but then I have one monitor on top left that was where I was looking at the Streamlabs and your chats, and I had to minimize the chart that I normally look at that has all the footprints and order flow data on it. So that's just a good example of like how friction in your process you just be late to the move can be just not even worth taking anymore if you can't see it perfectly as it's transpiring. If I had to like move stuff down and put the exo charts back on the top left screen and make adjustments, by then it's like I have to refresh the chart because I haven't had anything change in a while. So maybe that exo was, I think the last time I shared it, I think it was up to date, but either way, it looks like we're going to squeeze some more shorts because these buyers that are coming in right now, whoever's providing liquidity on the other side of them, has not done anything to walk back price yet. No, I don't. I take a multivitamin called Thorn Research, AM and then PM. I drink green tea. So I'll move this so I can keep an eye on the footprint. I don't really look at, I had my other screen set up to look at profile, but I really don't look at profile too much. I mean, and this is gonna, not to say that I am a profile trader, but you look at profile, you get an idea of where the prior days were, you make some notes, write down your levels, and then that's it. I mean, you don't keep looking at the profile. So I set the stream up so that the ladder would be next to the profile. I should have had the ladder next to the footprint chart. Hold on one sec. It's all scaled wonky. So I think now it just looks like, honestly, we're going to try to run these highs. So 40K would be a good region. So right up to, it's like right around 39.87 to just under 40,100. There's a little gap right here. So that is right here. So I'll keep the hourly chart on just so it's compressed properly for you guys. There's a little gap right here. So based on the activity we're seeing right now, just kind of late, just longs coming in, but not like they're getting off sides because shorts are closing out. Shorts are continuing to come in. There's a little bit of a battle taking place. You can see it in open interest right here. Just more coming in, more people coming into the market. Obviously anticipating what is an obvious level breaking. So I would look for this level to get flushed. And if we see a good amount of volume come into this pocket, it might offer a decent short setup. So it's, again, when I was talking about the inside day setup earlier, I was saying, there's a difference in the way that the upside plays out than the downside. I expect more from the downside. The upside's iffy because your inside day is like, the technical inside day is to the prior day's high, and it's like, I think that is like a $300 window. So that is from like, Yeah, that's like a 275 point window. Not very attractive. So I was thinking that would run more to 40 anyway, but I think that we end up getting capped off regardless. But we'll see. Again, noticing some similarities between these structures. So looking for the fake out. If we don't get the fake out though, right? So, let's say for example, we get the break above these highs. The setup looks great. Bunch of buyers come in towards the high, not that high. Bunch of buyers flush in, clean this up. It's probably going to be overthrow, right? If you have that, we start trading lower. Be a good opportunity to look for a quick short. But if we end up, like let's say we break above these highs, volume comes in, and then we get selling coming in, and then this level's holding, this might be a much longer move, right? This might then lead to something that has legs. But it's all dependent on when we actually flush those highs, which I think is set up. I would have a hard time thinking we just roll from here. I mean, that'd be pretty weak. But if we end up so this is a pretty well-defined region, right? If we hold these highs, there's really not a whole lot here. I mean, again, zooming out, just to remind you guys of this center region has been just one-way trips every time we've accepted within. So if we look at like I'll put on the other one. If we look at this now, it's a little bit more obvious, right? Bounce, conviction, bounce, and not for nothing, not for nothing, not for nothing. If we not for nothing up here, it's not for nothing. No, the center of this structure is pretty vacant, right? One-way trips when we accept within. Double distributions, basically. So I don't think there's a reason to assume that. I mean, maybe because the transition is getting capped off sooner. Hold on, let me open this because maybe this is transitioning down sooner than reaching prior highs, so maybe it gets capped off earlier. But if we accept back within this gap, there's no substantial structure, right? It's a little bit different than back here because these were incrementally higher highs, and this is an easy stop run once it starts going. You have little regions within here that might be sticky. So, if we accept above 40, and when this is not a fake out, then yeah, you're probably looking at least 41, right, to the underside of this little structure. But if you look at this on like, like the daily. No, excuse me, not the daily. If you look at this like it's the same thing, right? 4-hour, 1-hour chart doesn't really make a difference. But the day on the way down, the point is, there's like you would say that there are areas you would logically look to take profit. In this case, it would be a naked point of control, a pretty thick, high volume node right around 41.3. So I think that's right around 41.3, right? Yeah. So if we put on, I'll just put this one on. So right here, 41.4, right? The point is that's just where there's the only pickup in activity there. So except above 40, and you're probably looking at that. Again, not a whole lot that's taking place within these structures besides just one-way trips, trending moves that are inefficient to begin with, right? Yeah, I think I fixed that. Sorry about that. 20-day MA at 39.7. Yeah, so if we look at VWAP real quick, that's daily, but what are you looking at? What VWAP you looking at that you're mentioning? Last week's VWAP is all the way up here. That's at 41.5. Maybe I missed you. Said something else. I think ETH. Oh, let's take a look at ETH. My bad. I'm trying to look at both chats. It's not that hard, but hold on. ETH. I mean, ETH's actually pretty clean. So let me switch this up again. Hold on. ETH is pretty clean in the same way that BTC is. Right, both of them basically rejected off of this one big deviation down here, right? It's one day. The value area there is stretched out because the day is really elongated. It ended up being a trend day, but the last couple days are clean, right? You have balance, same sort of breakdown, B structure, very balanced. I think you're looking at basically the same setup take place. But with ETH, you have a little bit more throw to prior day's high. ETH is just going to be higher beta to BTC, right? You have like a 100 basis point move up there. Not a bad scalp. Hold on one sec. I'm just moving something around on my other screen. Yeah, fine. You're getting a ramp up in both sides. Sellers fading this. Buyers getting aggressive towards the highs. I mean, if we look at ETH the last few days and compress this as one composite, whoops. I mean, a break outside of the entire value that we established, which is right around the highs of today. You have a little ledge. So just area where you'd expect stops to get ran, right around 2680. But, you know, your naked point of control off the trend day that came down, 2720. I think with ETH, it's the same with BTC, where it's the inside day setup is not just from yesterday's high to the prior day high, but because we've had this transition down with no highs taken, if we take a prior day's high and we run into this liquidity, the ETH probably stretches more, right? I mean, that's ETH, and then that's BTC. There is there's no real gaps. There's no single prints for ETH in the way, you know, until you get all the way up to 27.5. Whereas BTC, you know, you have this little single print gap. It's this whole area is there's a good amount of confluence in this whole region. You know, normally a gap is a good area to, you know, this is a high probability region to expect a response. Yeah, this is EXO. mean, so far, if you want to just talk about just basic absorption, right now we are making a marginal, I mean, it's basically equal highs right now. But if we were to look at, let me switch the screen. One sec. Oh, where did my Streamlabs go? I can't see if you guys can see what I'm seeing now. Fix this. Okay, so we're looking at a bunch of different CVDs here, right? So that's why I think this is the knee-jerk reaction might be when the volume came in above yesterday's high to short, because it would have been, okay, maybe that's a possible trap. But like I said earlier, there's a potential for this to be leading. So until price loses the level, and now the level is getting isolated right to where where we are in this region with a lot of the open interest coming in, anyone who's passively selling this could very well be the one who's going to be offside soon. And if you look at price now marginally higher, here is coin margin CVD, so just for the relevant exchanges, higher. Here is stablecoin margin, higher, right? So this would normally be something you would say looked just briefly a second ago until we broke the high, like absorption, but really it was just leading because price continues to move up. And spot CVD also. You have spot CVD getting behind this relative to that local high. So not something, I think that your fade might come a little bit higher up, right? So if we go back to, for absorption, you need to see that price is actually no longer able to hold the level, right? So now we have, and I don't really like to look at profile during the day, the developing day, I don't really like to look at it, right? I care about where it is with respect to previous days. But if you just looked at this right now, you already see, if early on in the day, if you see something develop that's wonky or like a anomaly that's a clear anomaly, or, this is not as significant, but if you had a poor high developing in the first couple hours of the day, and it was like blatantly obvious that it's 3 or 4 stacked, chances are that level is going to get ran. Very rarely you're going to leave a profile that ugly early on in the day. So we have a poor high that's currently took yesterday's high, no excess, right? So no real stop run yet. You would look at this, if we continue to finish this day as an area you would expect to get revisited, and then hands down, would you definitely expect this level to get ran? Because, I mean, geez, then we would have multiple highs in this region, a bunch of equal highs basically, poor highs, right, into a level that had previously finished highs. So this would just hands down, we're expecting a stop run up here. What was I going to say? Something about, I had a point. I had a fucking point. Damn it. Damn, I had a different point. I know I had a different point. I can't think of what it is now. Maybe I touched on it and I just forgot that was my point. Hold on. Knocked over a can of ginger beer. Gosling's ginger beer is actually really good if you mix it with Pellegrino. On its own, I don't know, a little spicy. What was I saying? Something else. I had a different point, guys. Maybe I touched on it. So anyway, yeah. Let's see if we can run this level. If we get any kind of offsides positioning in there. Some longs are starting to close out right now as we kind of bounce around this high. Maybe beginning to rethink their positioning, but that's Coinalyze, yeah. Oh, this is from this song is what is this? This is from that really messed up movie. No, what is it called? Jared Leto's in it. The mom's obsessed with game shows. They're heroin addicts. What's the movie called? It's a depressing movie. Oh, what is this called? I should just look at the song. I didn't want to look at it. Requiem for a Dream. We getting the squeeze? All right, maybe we get the squeeze. Yes, Requiem for a Dream. Let me see some. It's a really good mix, actually. There we go. This is a good song to listen to as shit is getting fucked up. Wow, super articulate, right? As shit is getting fucked up. Good thing that we don't have like I don't know, higher ups to worry about. Monero up 25%. What? Let me change the screen real quick so that you guys can, so we can be on the same page. Let me turn down this sound too. Monero, huh? Ooh, look at that decoupling. Brief, right? What did I want to look at? All right, so I'm just on a watch list to the right. I just want to see if I know I always have XMR, and I can't find it right now. On a not that I ever traded or anything, but holy shit. Isn't that something? What the hell happened? Did someone get wind of something and is transferring a ton of money to skirt regulation? What did I miss? Did I miss anything in the news? Privacy? Oh, is it because Zcash? It might be a correlation play between Zcash and... I mean, Zcash didn't do as much, though. Maybe it's because... let's see some real quick. Is XMR thinner? Yikes, that sucks. Let's see. Let's turn this music off. So Binance market depth for Monero is, I mean, you don't find Monero on a lot of exchanges, period. So it's going to be thinner. Is less than 1 million for 2% market depth. Then you have Zcash that's probably thicker. He writes it out phonetically like it would sound. Z-E. No, they're basically the same in terms of depth. Maybe because there's less exchanges that actually even have Monero, so aggregate, there might be less depth. But that's interesting. I mean, I'm looking at Zcash right now, and I'm thinking, wow, this looks like a good technical setup, and it has a catalyst. Yeah, in other conditions, this might be phenomenal play. And I just mean, technical setup as in pretty obvious level. Let me take that magnet off. Right? This level being a pretty pivotal region. So but it's Zcash, so it tends to just cuck everybody, right? Let me look at some Binance USDT markets. Yeah, what is that? I'm just going through some stuff that's pumped. But you can see what kind of market we're in. There's a lot of stuff that's pumping and just completely coming undone. Secret network, huh? Damn. Decent setup, possibly. But, and I like to, you know, I've talked about this many times before. Weekly charts for alts, reclaims of weekly lows, usually leading to a good amount of follow through. I mean, if we look at these daily levels and these weekly levels right now, I mean, the daily levels is right around 484. Not precisely, but the point is this. Let me get rid of that. These lows. So looking for that to potentially act as resistance, but possible transition chain taking place. Or who knows? I mean, I don't want to say that because it could already be done. But the point is the weekly reclaim was right. Here's the weekly low, right? And then last week stabbing through. And then if you go to like the low time frames, this has not really done anything to retest it. I imagine though that if this pulls back, this 450 level offers a pretty good bounce. KNC, I think it was, had one of the best technical setups. I had it saved. No, here it is. Just look at this setup. Let's make it naked real quick. Since June, essentially, of last year, right? Look at the just confluence of this weekly region and the daily levels. So super clean, right? Super technical. June, August, September, November, October, November. So this is like a no-brainer long. Just high probability. Of course, it's bear market kind of things. This was a market that would, more than likely things that go on to do something from a level like this end up retracing, right? But the point is, a technical level that's been technical for over a year now, or almost a year, daily, weekly, really well defined, big move above it. Everybody and their mom and their dog is going to be looking to buy the retest. So just chances are, if you scatter orders back down at this level, and you can see how this actually ended up closing the gap. So you had this inefficient move up, but between the weekly and the daily levels, a pretty thick area in the past, right? Just from the left. Price came into it and found support and ripped out. So you might look as, hey, the first responses, first bounces, but chances are that you're going to get a decent move off of that level. And usually what that means is the retest of this level, at least. So let me get the levels a little bit more precise so that you can see exactly. So here is the most local daily highest weekly close. And then here is your daily levels going back, right? I've mentioned this many times before. I always want to know where the weekly levels are, but more importantly, zoomed out on a higher resolution, where is the exact region where price pivots? So specifically, daily levels, more recent daily levels being more important, just to get you a rough idea of where more precisely the area is. So you can see it's loose around here. But the point is, not for nothing, I didn't mean to draw that weird little slice of an apple. A move off of here, if it comes from here, is usually at least going back to the high. So, hey, maybe it's a stop run at the high that nukes, 50% lower. Point is, this trade from loosely around here back up to the high is on the table. And if you're conservative, maybe you think fill in this region and I'm going to play to the underside of the structure, right? Because, hey, maybe backside retest of prior consolidation in this little pocket, and then maybe a lower high, and then blah, blah, blah. But now the chances are that if we come and visit this low, where the flip occurred, because this was such a important area, that it offers another response. So chances are if we tap this low, you get another bounce. And then maybe at that point, you're thinking more along the lines of you could take like a fib out or you know, just mid-range it. But this low probably leads to, one sec. Fuck, I keep tapping my drawing tools. Market with this. That low probably leads to this. Another 10% move. 15% move, right? So, not bad for no effort. More than likely. Meaning, swipe the low, bounce to that level. And then maybe it just dies from there. Who knows? All right, guys. I think I'm going to wrap it up, though. Yeah, this is a ugly structure in the making towards the high. So you're running these highs. I mean, I would say with a high degree, almost near certainty, that you're running these highs. And then maybe you get the short from here. I think that covers it. I'm not missing anything, right? Okay, so yeah, no, there's really nothing that's that compelling. What everyone's saying Luna right now. Yeah, Luna marching up towards making another all-time high. Is this going to be a double top in the weekly? I don't know. Is it? I mean, I'd say probably. I mean, chances are if price gets all the way back up here, I think that you have you know, Luna is really strong. Luna was a later pair rotation-wise, so maybe it has some lagging strength. It also has a good case to be made for maybe smarter participants being more aggressive with this. But if you end up taking these highs with Luna, I doubt that the market just continues to rip up. You probably, and I'm just using the fib to get an idea of where mid-range is. I mean, you would expect that maybe double top is a narrative at that point on the weekly. We'll see. I mean, who knows what kind of activity is going to happen once you get up there. All right, guys, that's it. It's been fun. I don't trade XMR, so I mean, I looked at it a second ago. Big pump, not something I would chase. Not something I would trade because I don't want to be put on some, like, you know, fucking watch list. Like 30 years down the line, like at a knock on the door, like, hey, you traded XMR 20 years ago. Why? You know? So, yeah, I mean, look at this. It's already from the highs. It's 30% off the high. And not for nothing, prices, yeah, it is ranging, right? There's not a whole, like, there's not really, XMR I don't think is something like you want to trade. I would say if you have a belief in privacy coins, it's probably something you want to just stack away because it's probably not going to be on exchanges forever. Exchanges that have it don't allow you to take it off it, I don't think, for the most part. And because no one really wants to touch it, it's not a very prioritized pair in terms of providing liquidity. So, I mean, look at that. You just had, I mean, let's look at, really quick, let's see if we could pull this up on Binance. Check out the buyer. Did I just favorite that? Hold on, let me move something so you guys can see a little bit more of the margin. Where is it? So the only reason I'm doing a stream right now is not because it's a low volatile period, but because my wife is actually out. So otherwise I would not be streaming. Oh shit! It's 10 o'clock at night. Where's the time went? Wow. I would never have. I lost track of time, and my lights in my office are still on, and everything. I'm like super picky about the type of lighting in my house at what time of the day it is. Wow, that's pretty huge jump right there. That's a lot of activity that's coming to the market. Wow. Someone's got a position to protect. Definitely don't want to see you lose that structure. You know that. I mean, I hate to say that. That sounds ridiculous. This is pretty evenly distributed in terms of the activity coming behind it. So it's not like it's really top heavy, but it's easy to get the ball rolling once you start losing some of that, right? So big increase in open interest, like a 50% increase in open interest. So 50% increase in open interest, but right? I mean, 20. Wait, was that the extent of the move? 70. Why is that? Oh, this is spot. That's why. Okay, thicker book. Looking at spot that. Looking at futures and looking at spot. That's probably why. All right, guys, that's a wrap. Have a good one. Until next time.